Hey guys, what's up? Welcome back to DCA. Tonight what I'm going to do is talk to you about what is, in my opinion, one of the most fascinating charts in all of cryptocurrency. So we're looking at Ethereum and Metcalfe's law. Now, if you don't know, Metcalfe's law says that the value of a network is proportional or equal to the number of users squared. So in red, we have the active users on the Ethereum network, and in blue, the active users on Bitcoin network. We're starting though from a slightly different point. We're looking at the active addresses of these two cryptocurrencies at the point at which they attained 1 million active addresses. Okay, so for Ethereum, that was dating back to approximately June of 2017, whereas for Bitcoin, that's April 2013. T0 on this chart is equal to those dates for Ethereum and for Bitcoin. So this is present day for Bitcoin, and right at this point is present day for Ethereum. When you look at the age from the point where they attained 1 million active users, the similarities are actually pretty striking. You can see that they're essentially at the same point. So this would be somewhere at around 1600 days following the point at which they attained 1 million active users or addresses. So next what we're going to do is look at that same relationship, but we're going to do it with respect to price from those dates. So remember, the ages of Bitcoin and Ethereum are different. So to compare apples to apples, what we want to do is start looking from the point at which both networks attained approximately 1 million active addresses. This occurred at 4/2013 for Bitcoin and 6/2017 for Ethereum. And this is the price of these two currencies over this time period. So you'll notice I haven't normalized these prices. This is the first peak for Ethereum, or the price peak for Ethereum back in 2017, whereas this is the price peak for Bitcoin back in 2013. Essentially 1350 or 60 and around 1100. So the price peak occurred at a very similar price point, and then the drop thereafter, and then the ascent to where we're at now, very similar again. Now, this is what's interesting. So notice where we're at right now. The price at this day following reaching 1 million active addresses is 4588 for Ethereum. For Bitcoin, on the same day, 4591. So 1,607 days later, the price is only a few dollars different from the time at which they achieved 1 million active users. You'll notice from here, Bitcoin went from around $4,500 up to around $20,000 in only 110 days. So 110 days from the point that we're at right now. For Ethereum to do that, for Ethereum to go from the price of around $4,600 up to $20,000 in 110 days, that would put us in February. Remember, the price is not always the same, even though it's been adherent to the prior moves of Bitcoin. There have been price differences, so that doesn't mean that we need to go to $20,000 in nothing more than 110 days, or that this is invalidated. It doesn't mean that at all. But what it does say is if Ethereum continues on this trend and continues adding users to the network and adding value per user to the network, that within some amount of time between now and a year or two from now, because if you look here, the time difference between here and say here, where there was a gap in price, is about 2 years. That sort of indicates if this trend continues, Ethereum would more than likely reach that $20,000 mark sometime between now and a few years from now, if this trend continues. And thus far, there is nothing to indicate that this trend is invalidated. Once we start to move past this $20,000 price peak, then it draws into question, well, is Ethereum on track for where we're at today? And I think it's way too soon to tell that. And that will depend on a lot of factors which may not even have begun to play out yet. It could depend on other networks, just things like Solana come to mind at the moment, Cardano, other networks, other layer ones. And, it also depends on Bitcoin and the crypto climate in general. But at the moment, we are on track for this to remain true, where Ethereum eventually being not the distant future, reaches $20,000. So you might be shouting right now, well, what about the market cap? This doesn't take into account the market cap. And you're right. So just remember, there are many more Ethereum than there are Bitcoin. So what that indicates is when these are at the same levels, the market cap for Ethereum is much higher than the market cap would have been at the same time for Bitcoin. Okay, so this is what we just looked at. But what this demonstrates is the market cap per user. Pink is the Bitcoin market cap divided by users, and green is the Ethereum market cap divided by users. So notice that the price, while the price has been very much the same over this time period, the market cap has actually been much higher for Ethereum at any given point in time per network address. This indicates that Ethereum is being valued actually more per network address than is Bitcoin. And you might say, well, this is an overvaluation or what have you. You can come to what conclusions you'd like there. If this trend continues, it is very likely that unless Bitcoin were just to go purely parabolic, it's likely this is the formula for the flippening, where Ethereum gains a market cap greater than that of Bitcoin. Now, I know some people may love that, other people may hate that. I don't have an emotional stake. My approach is purely non-emotional. You need to just react to what the facts are on the ground and take in the data. Now, that doesn't mean this says nothing, to me at the moment. I will still make Bitcoin my largest position. But for this reason, this is why Ethereum is my second largest position for any number of factors, but this just perfectly illustrates that fact. There is tons of upside potential associated with Ethereum. So lastly, let's take a look at the chart and the logarithmic regression band for Ethereum. This is the lower and upper log bands for Ethereum. So what we would ask ourselves is, does the logarithmic regression band even permit there to be a $20,000 Ethereum? And in fact, the upper band does. So the lower end of the upper regression band extends to approximately somewhere around $12,000. And while the upper band extends currently up to around $28,000. We don't always expect to get to these highest orders of the regression band, but it's just to say that it is within the realm of possibility then, because we don't expect to achieve, let's say, higher percentage gains than we did in a prior cycle. So this accounts for the expected decay or diminishing returns over time. And with that, the upper band says that we can, in fact, get to that $20,000 level. And remember, as time goes on, this will increase, okay, as will this lower band. The last thing we'll look at is, I always talk about the market cap. You have to consider the market cap. The price doesn't matter. The price can be anything. It's all dependent on the total number of coins. And when we say $20,000, well, let's ask ourselves, what kind of market cap will that give us? We talked about for Bitcoin yesterday, when people say $500,000 Bitcoin, up to $1 million Bitcoin, that's somewhere between a $10 trillion to $20 trillion market cap just for Bitcoin. When you look at these things, you have to consider what it is, the price prediction you're looking at is, and how it relates to the market cap. Because if these numbers don't make sense, the prediction makes no sense. For Ethereum, currently we sit at somewhere around, so there's a circulating supply of coins of around 118 million. Currently we're sitting at plus or minus $4,500, giving us a market cap of approximately 500 plus or minus a few billion. If we were to go up to 7,500, that would put us near $900 billion market cap. Up to $10,000, where we get to 1.2 trillion, up to $15,000, where we get to 1.8 trillion. Mind you, a $10,000 Ethereum would also put us where Bitcoin is right now. So finally, to get to the $20,000 level, which we got to back in 2017 for Bitcoin. So that is to say, to get to this level, which we are currently, at least according to this one metric, we are on pace to do. To get there, it would require about $2.4 trillion. It's a lot of money. I think it would require a lot coming into Ethereum, but to me, that's one of the, sort of the more out there predictions you hear that I think is totally reasonable. I don't know how quickly something like that is likely to happen, but I think this is, for all intents and purposes, completely reasonable to say a $2.5 trillion for Ethereum. Overall, that's going to require one of two things. A, it's going to require Bitcoin to also have a much higher valuation and, at least probably $200,000 or more, or Bitcoin starts to somewhat fall out of favor and things start to swing towards Ethereum. And that's when you get the price flippening, as it's called, which is Ethereum surpassing the market cap value of Bitcoin. So personally, I tend to think that Bitcoin is going to continue to be, the king of the hill and sort of dominate the cryptocurrency market. But I think to ignore what Ethereum is doing is quite frankly foolish, and there's nothing but bullishness to be seen all around Ethereum, especially, Ethereum 2.0 is coming. And mind you, Ethereum 2.0 is set to be released somewhere around, probably slightly after this would be in February, but somewhere around in this area. And as we've said, these haven't always lined up. There have been slight price differences. So it's just something to watch for, guys. Just another piece of evidence to suggest the overall strength of Ethereum. And with that said, that's it for this one, guys. If you like this type of content, hit like and subscribe. And until next time, as usual, see you.